There's the election this week, but also a small matter for investors of a Fed meeting. Senior economics reporter Steve Liesman looks at the debate on whether the Fed should cut rates after what we've seen as far as a surge in bond yields.
Yeah, Joe, this is interesting here. Some have looked at the recent surge in those bond yields and concluded the Fed shouldn't cut rates this week, but that might miss the real debate going on in markets. It's really a debate over your favorite topic, Joe, the terminal rate, or that is where the Fed ultimately stops. Since the Fed cut 50 bips in September, the 10-year yield has surged 80 basis points, an unusual move with more cuts ostensibly on the way. But while that's been going on, take a look. The probability of a 25 basis point cut this week has remained remarkably steady, now at 98. It's been north of 90% the whole time. Chance of December is now at 80% or north of 80%. It's January and beyond. That's where the debate is about where rates are going. And that's part of a longer term debate that's been going on about the Fed. If you take the October 25 contract, take it as a proxy for the terminal rate. That is where the Fed stops. It's up more than 80 basis points from 282 to 363. But notice, it's still 100 basis points lower than the current rate. So the market still has lots of cuts built in, just a lot less than it did before. Behind the yield surge, we've had some better growth numbers, somewhat firmer inflation, and of course policy uncertainty with yields rising with the improved chance of former President Trump to be reelected. In fact, Wells Fargo, among others, this chart is making the way around Wall Street, has for a couple days now. The 10-year yield increasing with Trump's chances of victory in prediction markets. It could be expectations for higher growth, could be expectations for higher deficits, or both. Assessments, of course, of Vice President Harris's plans show less new additions to the fiscal deficit, but continued high levels of red ink. The election uncertainty adds to the market's uncertainty over what is that terminal rate. It's really hard to predict monetary policy if you don't know fiscal policy if a big change is coming. But that confusion should not, at least for the moment, extend to the idea the direction of rates remains lower regardless of what the 10-year has done. Had a nice chat with Michael Feroli over the week on Friday at J.P. Morgan. He says the market now is much more aligned with the Fed, which is once you get through November and December, it's like an every other meeting kind of thing for next year.
That's
until
what
you get down.
Roger Ferguson said this morning.
You know, I heard Roger steal my entire line of thinking at 6 a.m. and I wondered about turning around in the traffic and coming back home because what Roger said is what.
If we talked about Jim Grant and what he said when he was on, did you see that?
I did. Yeah. Which part of it?
The part where you have a 40-year biggest bull market in
now
in
the bond
history.
goes away.
Does it end in a just a little whimper where and inflation's definitely
Joe, I don't know.
Bed? You don't think we can?
I don't know if I want to make huge conclusions over. I feel like the bond market, and Rick has always been very good about this, finding the new range, right?
Yep.
You were down at 360. Now you're back up at 425. That seems or feels like the top of a new range here. And maybe it comes down a lot of talk about settling down at maybe 4.
I've got a bunch of questions about whether the Fed can ever rein in some of and reimpose fiscal austerity at some point.
Well, that's a big debate. That are you on Joe's side now on this?
No,
that the Fed should control Congress?
No, I just have a huge question about whether, if you think the Federal Reserve's actions that were taken in a time of emergency, if that enabled fiscal austerity to get thrown out the window, is there a way to wrap that back in when we're no longer in a crisis?
Well, I mean, the Fed is going to keep. Okay, if the Fed keeps rates at a place what is neutral, that is balancing the supply of credit and the demand for credit, and the government borrows a lot, that neutral rate should be higher, at least the long-term and medium-term rate. So in that sense, what the Fed is saying to the federal government is, if you want to borrow more, all things being equal, those rates will be higher.
Is that what the move in Treasury yields?
I think that's part of it. Look, the growth numbers have come in better. You're at 2.83% now. The jobs numbers have failed to. The weekly jobless claims have been pretty strong. Most people are looking through. I saw a little bit of softness on Friday in those jobs reports. So did some other folks. I thought that even if you added back the strikes and the hurricanes, you still were in the 100,000 range, which is definitely lower than it had been before. So, yes, the market has been adjusting. And it's adjusting to the possibility of higher deficits pretty much no matter who came in. But the numbers for Trump are quite a bit higher. But then you kind of get into the Paulson explanations, which are all these guys coming on and saying Trump has said this, but he's only going to do that. And that's really part of the calculus of what he can accomplish. The thing that I've been most interested in, and I want to say concerned about too, is the tariff stuff he does not need Congress for. The tax stuff, both Harris and Trump, they have to go through Congress for that stuff. The tariff stuff, because of national security provisions in the tariff law, he can do on his own.
You know, just if we're at 23% spending, and it just got to come down, and that's why it just got to.
The argument, look, Contino's telling me we got to go, but here's the deal. The argument is that the Fed are the only adults left in the room, so they ought to impose some form of austerity on the government.
I should not be paying credit cards for everyone I know in my family, but there are still some things that are out there. Now, once they spend it, I am good for it, but I am allowed to say, can you please?
But Joe, under your construction, you have your kids regulating your spending.
Yes.
That's the construction you're talking about.
True.
If you have the Fed imposing austerity on Congress.
Can I try to influence them to not spend as much? That's not.
No, you can influence them. Yes, you can say.
Okay, that's all I'm asking for.
That's a really good point. I think Powell can and should speak up a little bit more.
Okay, there you go.